Hello and welcome to this very special and first edition of Women's Wednesday powered by Mirae Asset Investment Managers India. I'm Kavita Thapliyal and with me I have Shrinivas, Khanolkar, Head Product Marketing and Corporate Communication, Mirae Asset Investment Managers India. Welcome to this show and what a day to begin this series. Women's Wednesday where we have Diwali, a very shubh timing, if I could say that, to begin this very important series, especially for women, women investors and women who want to become investors. And today we are going to talk about helping women understand what is equity and what is debt. So how would you like to simplify this?
First of all, thank you, Kavita. I think it's an incredible initiative, Women's Wednesday, a day dedicated to talk to women about what they feel about their personal finances, their investments. And I think the topic that you have sort of chosen for today to have a discussion is almost like a tug of war, right? Between two different asset classes, and a lot of people sort of find it very difficult between risk, return, safety. How much should I expose my investments to? And I think from a woman's perspective, if you have to look at it, probably we'll have to reverse the question. In a family of 4 with 2 kids, I don't think they will find a tug of war between choosing one kid and the second kid, right? So it's important for them to have equal allocation of their time, their efforts, their mind space to both of them. Now, if we are in a situation where they are continuously thinking about this, whether I should be going for X or Y, then the quality time that they should be dedicating towards the family, their own workspace. Today there are so many women who are independent, and I see so many women who come from business backgrounds where earlier there was a phase where they should not work, but today they want to have their own independent identity. Even if they are married, they want to have something of their own. And for them, when you look at that angle and you look at that, whether they should be devoting too much time on deciding whether I should go for higher risk, higher allocation or safety, or choosing between equity and debt, I think that tug of war can be avoided.
That can be avoided, but how can we do it?
Yes, so we can look at different type of products, right? There is a whole segment of hybrid funds, which is a combination of multiple asset classes, right? So in like an insurance, it's very simple. Either it's a term or an endowment. Anything else is a combination of all of that. In mutual funds also, you have equity as an asset class, you have debt as an asset class, and then you have the bullion or the commodities, right? Gold and silver as an asset class. When you try to sort of combine some of them, then your hybrid funds start coming out, where risk is spread out. Obviously, that will mean that your returns will not be as similar as equity.
Like a pure equity fund.
Like a pure equity fund, because there will be 100% exposure to that. But here you will have probably like if you take an aggressive hybrid equity fund, then the combination would be about 65 equity, 35 debt, which sort of eases out on the risk element of the portfolio. Of course, it doesn't mean that you will probably lose out a lot, but at least the risk element of the portfolio
starts.
You are diversified. Then you have, say, the balance advantage funds, which is a combination of equity, debt and arbitrage, and those positions will help you sort of again balance it out, right? And then you have something which is multi-asset. Now, I think in the past we have seen that gold, we are talking on the occasion of Diwali around the corner. So people would have witnessed gold in INR terms deliver great returns over a period of time. Unfortunately, whether it is a man or a woman, most of the discussions are, it's rising, should I buy now, should I wait? Or in investment terms, it's about, can I sell now or should I buy now, right? And in that whole process, probably we have lost out on allocation to gold. But in a multi-asset, there is always a 10% allocation to a gold or silver forever, right, in that product. That's the minimum limit. Of course, the managers can decide to increase that, but minimum in those funds you have to give it. Now that actually gives people such a beautiful option that they don't have to worry about I'll keep coming back. They don't have to be in this tug of war of whether I should be choosing X, Y or Z or equity, debt, yeah, gold or whatever. So there are products for it, and I think people should spend more quality time, especially on the occasion of Diwali, right? I mean, you should spending more quality time with your family, with what they want to do, how are the education goals, and worry less about these allocations, because there are products to help you for that.
So this can be your first fund.
This should be
The first investment in
step.
mutual funds.
Yeah,
This type of a category can be your first investment.
Yes, Kavita, because if you're going to start off with like on a racetrack straight away, then I think you're going to feel uncomfortable with the speed.
Right.
But at the same point of time, if you start off practicing first, why there is net practice in cricket before you go to the actual match? It's because anything which you're missing out, you can better. So if you're going to step straight away into a 100% risk sort of a portfolios, then there are bound to be, your entire portfolio is going to get swayed with markets, right? But at the same point of time, if you enter such portfolios where at least there's a cushion of debt, then your first experience is not going to be difficult for you to sort of keep continuing.
Right.
Even in the international terminologies, we have seen that most of the investors in asset allocation products tend to remain much higher.
Okay.
About 4.6 years is what they remain invested on an average, as compared to say 3.3 years in equity or 3 years in debt.
Okay.
Which tells you what? It tells you that investor, once you have addressed this question, then you're free of the other space.
Right.
And you can actually concentrate on the goals much better rather than worrying on the volatility.
Yeah.
And as today's women who have such multifaceted roles in their life, I think this should be the least part they should be sort of, thinking about, at least as a start off.
Yeah.
Let's start off with that, and
Just
then
take the first step, and this is the first step in the right direction. But what about taxation? Since we're talking about hybrid category and they are really diversified, in their inherent nature, what's the taxation typically like on them?
I think it's more or less, it depends on the composition of the products.
Okay, sure.
Today the taxation in fact has become very clear. Anything which is more than 65% equity in the underlying portfolios are taxed as equity. So that's a 1 year sort of a short term, and more than 1 year is a long term gains. For any other asset class, it's become a 2-year window, right? So if you are investing anyway long term, then I don't think it really sort of matters unless you want to only time it.
Yeah.
So after 2 years, all products are now aligned.
Right.
And most of the hybrid funds, if their underlying assets are more than 65% equity, then anyways you're going to get equity taxed, right? So while there could be some products in the market which differ in terms of underlying holdings, but I think the easier part for everybody to remember is that after 2 years, everything is long term, everything is 12.5%. Up to that period, depending on what is the underlyings, either you are taxed as equity or you are taxed as your income slabs, or you are at this 2-year 12.5%, right? So it has actually become easier for everybody to understand.
Yeah. Since we mentioned gold and we're talking about Diwali being around the corner, what if someone wants to have an increased allocation in gold? What should be the strategy then? What kind of a route can one opt for?
Sure, I think there are gold ETFs. There are gold fund of funds, which investor can definitely opt for, and I think women will love it. That there is another way of holding gold and not just waiting for certain days to buy it. You can go and buy on any occasion. And if you look at it from a different perspective, if you want to increase your allocation to gold, we already mentioned that there is a multi-asset sort of a fund, right? You can take exposure, so your risk gets evenly spread out across all the asset classes. But I think gold ETF would be a good sort of a way to go forward and buy it. Or if you do not have a demat account, then there are gold fund of funds, which again invest back into it. So if you want to be smart and sort of have that trading opportunity, then definitely come into these sort of products. If you want to be a long-term investor, but you don't want to be really worried about whether I should go for A asset class, B or C, and don't want to lose out on gold, then I would say go to multi-asset.
So typically, can we say hybrid for a category for people who don't understand asset allocation really clearly and also have a relatively conservative risk appetite? Can that be right to say? And women especially, if they do not understand how the market works, if they do not understand these investment instruments, this can be the reason, or this should be the reason why you should be looking at a hybrid category. Can we say that?
We can say it in a certain way, but I would definitely find a lot of women today who are investing in markets,
totally,
right?
Better risk takers also than men. Reports have said that.
Yeah. So the composition of the investor class today, which is heavily tilted towards one gender, I think it's going to change, and
Definitely.
It is changing. And in fact, if you look at certain other industry reports, even if being healthy, if today's show is about Women Wednesday, there is no wealth without health, right?
Totally.
So even if you look at that segment, the amount of spends the women are doing towards taking care of their own health are actually, from a branded positioning point of view, is actually higher than what men are doing. So they understand that bit, and they want to participate in multiple routes. For somebody who's coming here first time, and they've seen markets sort of do well over a period of time, and they are coming here and they want to sort of start off, we would always say take the first step, which is less risky.
Less risky.
Continue with this. Like in general terms, we say that start with an SIP. At least you're participating. Correct?
Exactly. Yeah.
Yeah. So it's like in some time back, abhi, that brand does not exist, but there used to be Wednesday Bazaar.
Yeah.
Right? And every Wednesday, the woman would go out and buy little. And Diwali mein bonus aata tha. Right? Sure. So that was your SIP, this was your lump sum. Right? So they understand that biz. Now, if you have to convert that here, then starting off, say, with an SIP into a multi-asset or a gold for that matter, if you want to, then I think that could be the first steps.
Sure.
Start with something which you easily understand.
Right.
Today, if you look at the household savings also, maximum money is in property, then gold,
yes,
then bank accounts. Now, these are three things which they understand for generations. Like Kavita, we can go back to our own household and ask. Our mothers have bought gold, our grandmothers have bought gold, great grandmothers have bought gold. We have been generational SIP investors in gold, right? But we have never given a name to it. Today, the same process is being applied on SIPs in equity markets. So why cannot we replicate the same process for other asset classes? You can do it same thing in hybrid funds, you can do it in gold funds, you can, if you want to do it in equity funds also, you can go ahead and do it. But I would say that if you're starting off, I think it will be easier for somebody to understand that, okay, there is some money going in bonds, some money in sort of deposit form, sort of, debt, some money going to gold, which is something which they understand very well. And then there is some more which is going to equity.
Sure.
And hence I was saying that a multi-asset could probably be a much better route for them, because traditionally they have known the other two asset classes better than equity. Having said that, the kind of money which is now sort of flowing, investors will expose themselves to much more different products, and our job from this podium today is to educate them more about what are the benefits and the risks of such products.
Sure. Which is why it is essential to at least take the first step, because be it Grah Lakshmi or Dhan Lakshmi, you have it all in you. Thank you so much for being a part of this interaction today. Thank you so much.
Thank you so much.